You know, I think when the dust settles, there will be a lot of opportunities when rates rise and these asset prices try to find equilibrium to fair value in relation to real interest rates. You will see market valuations on many things collapse. And there will be opportunities for those who have enough dry powder to take advantage of it. To me, gold and silver are wealth. They always have been. I've never looked at it as anything other than the way that I hold my wealth in a world of decreasing privacy. You know, and if I don't need to use it, I give it to my kids. Outside of probate, it's very, very private. It's invisible, and in a world where privacy is decreasing and you know, things are as chaotic as they are, I fall back on 5,000 years worth of history as wealth. And you go back and look at kings and queens and emperors and pharaohs, none of them ever called a gold broker to buy gold. They owned it as a mutable wealth to pass on through the generations. That's how I look at it. But when I take a look at what's happening right now, I look at every single asset class that you can buy, the main ones, stocks, bonds, real estate, that have all been blown sky high, and you look at gold and silver, you scratch your head. The short answer to why the markets have not responded the way others have, the metals market, is I believe it's the canary in the mine shaft. And if we're going to lie to the world about inflation, we're going to lie to the world about a lot of things, I think that selling fear for all of these years not only is transparent, but it's a lie. And I can't get behind something that I don't truly, in my heart, believe. But as I said today, it's the first time in my whole career that I'm afraid, I'm concerned, because I don't see a way out of this. Even if you take everything else out of the equation, you raise rates, you blow everything sky high, because everything is inversely correlated to it. You don't raise rates. If you pivot, like the smart money thinks we will, you choose what every other government has done since the beginning of time, inflation and printing over austerity and tough decisions. And I think we are so far down the rabbit hole, and we've created such distortions and misallocations in capital and resources that there's no way out right now. It's one or the other. And that's why I think they're going to choose the victim, or the villain, and we're the victim. Gold and silver are wealth. It's not an investment to me, it's wealth. And it's been wealth for 5,000 years. And I think you accumulate it because it's wealth, because there's great uncertainty, and I believe there's great revolution. When you talk about blowing all the money supply up the way that they have, this money has found its way into stocks, bonds, and real estate, mostly through hedge funds who will borrow money at next to nothing, blow it up into stocks, into bonds, make huge profits, into real estate, buy 50,000 houses and sell, rent them through Airbnb in a fund, or all of these creative ways of taking this easy free money and blowing up asset classes. And you saw it where stock portfolios double or triple in a year, where homes down here in Florida, the house I bought a year ago is doubled in a year. That's not how markets work. Cryptocurrencies that go up 10x, that is not how markets work. And it is all attributed to a massive increase in the money supply and a suppression of interest rates. So with that in mind, and with the assumption that the Federal Reserve has no intention on blowing things up, right? So there was a report that came out, and I think the acronym is the National Bureau of Economic Research, NBE, or something along those lines. And they came out and said, look, we've changed the way we measure inflation in the United States. We've stripped out food, energy, and housing. We did that after 1980. And so if you realize that the 13.6% interest rate, or inflation rate rather, in June of 1980 would actually be, if measured by today's metrics, would be 9.1%. Well, that's exactly what our CPI is, 9.1%. So you could actually assume then it's really closer to 14% based upon the way they used to measure it. In 1980, in that environment, Paul Volcker raised the federal funds rate, the then Fed chairman, to 19.75%. And that squashed inflation. But can you imagine what 19.75% on the federal funds rate would do to this economy, where, excuse me, you have mortgages that are going for 20, 21, 22% on the 30-year mortgage, where trillions of dollars in bonds were sold at 0 and 1%, where corporations have made all of these infrastructure enhancements and taken on all of this debt based upon a low interest rate environment. You raise rates and you start to kneecap the entire system. You blow up the stock market, the bond market, the real estate market. And the Fed doesn't want to be the one that ignites the fuse. So much so that them getting tough on inflation means raising rates to 2.25% over the last few months from 0, which is a big move. but it's still negative 6.75% based off a 9% inflation rate. 9% inflation, 2.25% on the federal funds rate means a negative real return of 6.75%. That's not getting tough on inflation. They tell us they're going to sell off their balance sheet. They call it quantitative tightening. They raised their balance sheet from $800 billion to $9 trillion from '08 to where we are now, and they've only shed $40 billion worth of assets, and they realize that if they sell mortgage-backed securities and U.S. Treasuries, interest rates spike. I believe they don't want to be the ones in the history books that blow everything up. The Belt Road Initiative, which is connecting 75% of human population, you add the other BRICS nations, this is just China and Africa. When you add all of the other countries, and you got Iran who just joined the BRICS, you got Venezuela who just joined the BRICS, and now you have Saudi Arabia saying, we're going to join the BRICS. Huge deal. You're talking 90% of human population. So how does the Great Reset happen? You blow asset prices up to the moon by easy money and low interest rates. You then come in and weaponize the dollar. You push everyone out. You destroy the way of life for the Saudis by going to a green economy away from fossil fuels. So we're basically destroying what they know as their infrastructure or their way of life centers around selling oil, and we are moving away from that. You can understand why they would want to leave the dollar hegemony, leave the petrodollar and move to another system, because I believe, if you look at the inverted yield curve right now, the big money believes that the Fed is going to pivot and go back to lowering rates and easing money supply. They will have lost all credibility. So how does the Great Reset happen? You have asset classes at all-time highs, and they're all inversely correlated to a rise in rates. All it would take, really, and I think two things will happen that will incentivize this. Number one, if Saudi Arabia says, thanks for the memories, guys, it's been a great run, we're going to issue, now that we're joining BRICS, oil in not just dollars, but ruble, yuan, rupee, gold, and the euro. And if you realize that every country on the planet for the last 50 years has had to hold oil or US dollars to buy oil, if they all start to dump dollars, which I believe they would, as the dollar becomes a hot potato. One country dumps it, the next country dumps it, the next country dumps it. Oh God, sell, 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 sell. All those dollars fall. Where do they go? They come back here. If you realize that we are but a small fraction of human population and the rest of the world has had to stockpile dollars for 50 years, all those dollars come home. If you think inflation is bad here now, watch what happens when they all come flooding home, as there's massive dollar divestiture into other currencies to buy oil. When those dollars come home, creating hyperinflation, peg number one drops, the dollar. Peg number 2, 3, and 4 are all inversely correlated to a rise in rates, stocks, bonds, and real estate. And if rates spike the way they would in a hyperinflationary event like that, there's your Great Reset.